Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, September 27th. We got a few economic news releases scheduled for dive right into it. We have Case-Shiller Home Price Index. This is an index that kind of shows the 20 largest markets in the U.S. So back in June, we had a year-over-year appreciation of 5.1%. So when July came around, it went to 5%. So not as of a big a number, but still within the range. It's still a decent number, what we're looking at in terms of where our home prices are going. We also got market services flash. So last week we saw the manufacturing industry, which had a nice big jump. This week we're going to get the services, and as you can see, we had a 51, which anything above 50 is considered doing well. It's expanding. Anything below is not so well. 50 or below 50 is kind of contracting, so we're just kind of teetering above that, and I'm up to 51.9. So I did have a little bit of a jump, but not as big of a jump as the manufacturing, as we would love to see services do a bit more improvement, as that does make up the bulk of the employment jobs out there. Consumer confidence. This is a great one here. We had a 101.1 back in August. And it was supposed to dip a little bit, and it actually went up to 104.1. So what does that tell us? People are feeling better about where things are at. They're kind of, I think the Brexit scare kind of went away, so we're not getting that so much in the news. We're getting, we're kind of getting football season. Maybe that's kind of cheering people up. Who knows? I guess it depends if their team's doing well or not. And I think where things are at, I think people are kind of seeing light at the end of the tunnel after kind of a long, drawn-out, credit crisis and everything. So let's kind of go in here a little bit further. We have stock markets up. They kind of took, it's taken a lot of it from some of the numbers like the consumer confidence really liked, but also the presidential debate. They're kind of factoring Clinton favored a little bit in the presidential debate, primarily because what they like about Clinton is more that she's the known commodity. She's where they view Trump unknown. So anytime there's an unknown commodity in the markets, kind of spooks them a little bit. So right now, that's why they kind of like Hillary. It has nothing to do with the politics. Just they know who she is and what to expect. Whereas Trump, they don't really know what to expect if he becomes president. Oil kind of dipped a little bit today because basically the OPEC and all the other oil-producing nations are meeting tomorrow, and basically Iran and Saudi Arabia put a squash, basically saying that there is not going to be a cap on production. So as a result, it pulled back a little bit today. Deutsche Bank is still kind of covering the news. They're a big concern, again, especially in Europe. A lot of this comes down to, if you may not know, that the U.S. government, Department of Justice, is trying to hit them with a $14 billion fine for their role in the mortgage-backed securities sales back in the just before the credit crisis. And they don't really have it. They think this could be potentially another Lehman Brothers, where if this is continues to go forward, this could basically bankrupt Deutsche Bank, which is a huge concern because they're the fourth largest bank in Europe, with about 1.9 trillion dollars in assets there. So that's a huge thing, and they're tied to a lot of other banks, including American banks and other European around the world. So they're kind of heavily tied into all these other banks, which could have a ripple effect with the other banks. And because this is a big fine, the other European banks are of course concerned, like Bank of RBS to the other European banks could be concerned that they could get hit with huge, large fines like the Americans have been getting hit with. So this is something of note, especially in Europe. And again, this is kind of trickling over into the financial districts here on Wall Street. So this is something you definitely want to pay attention towards. The bond market, we're down for the day, but what I like about this is that we started higher. So we're still getting this trend upwards. But with this line of resistance, it's been very tough for us to really break above that or stay above that. I'm not real comfortable that we'll really get above that or stay above that. So I would, if you have interest rates you're floating out there, I would definitely try to lock in while we're up in this level here, because I don't know if you're going to see much better pricing going forward. But today we're basically about the same price from where we left off yesterday. It didn't change. We did close up yesterday about 19 basis points, right at that resistance level. All right, so again, just be a little cautious here. I recommend not messing around with it too much. Just kind of lock in if you got interest rates out there, whether you're refinancing or purchasing. Maybe lock in. It would be a good time now. All right, have a wonderful day. Thanks so much for watching. We'll see you guys tomorrow. Take care. Bye-bye.